Good morning, friends. Welcome to Ecoholics YouTube channel. My name is Avinash Agarwal, and in this video, I'll be discussing with you important current affairs for 12th June 2024. So, I'll be discussing three articles with you. First two articles are going to talk about the fiscal deficit or fiscal consolidation scenario in India. We'll be looking at what are the present fiscal deficit numbers and targets. What should they look like? What can they look like going ahead? Why should we go down the path of fiscal consolidation? So these are the kind of typical questions that you will come across in your examinations. The first two articles will be very helpful in answering any question related to fiscal policy, fiscal consolidation, fiscal deficit in the current scenario. The third article is a mega article. It is a very large article which talks about the lithium reserves that were discovered in Kashmir. So what is the problem in mining those lithium reserves? Where is it that we need to put our efforts so that we can actually start production of lithium in India. So these are the practical problems associated with lithium mining in India. So we'll be discussing those practical problems and certain solutions for those problems. So very, very relevant articles that I'll be discussing with you from an exam point of view. And if there is any doubt that you all have, please ask. This note will be available on the Ecoholics app. You can download from our app after doing a quick free registration, going into the study materials section. Keep these basic things in mind. So let us start. The first topic is regarding fiscal deficit. So the central government, so it is on a fiscal consolidation journey. Year after year, they have been reducing the fiscal deficit, and that has become possible because we have had higher revenues and we have been cautious in our spending. We have made sure that our revenues through taxation, through non-tax sources are in the right direction. We have made sure that our expenditure, while it is increasing, but it is increasing remaining within the confines of fiscal consolidation framework. Now, important numbers that you need to keep in mind are some of these numbers. So for financial year 24-25 and 25-26, the targets that were set were 5.1% and 4.5%. When were these targets set? These targets were set in the month of February. This February 2024, when we saw the interim budget. In that interim budget, these targets were shared with the public. Now, we should be able to easily achieve these targets. If there is no shock, if there is no slowdown, then we should easily be able to achieve these targets. Our economy is doing well. Our revenue collection is in a healthy state right now. Our expenditure management is with a lot of prudence, with a lot of wisdom. So we should be able to achieve these targets. Not only should we be able to achieve these targets, we should be able to improve upon these targets as well, right? That is what the idea of these articles is, that we can actually improve upon these targets. So for example, instead of targeting, let us say 5.1% and 4.5%, we can actually target 5% and maybe 4.3%. That is also possible. So our targets from interim budget, they can be bettered, provided that the performance of our economy is robust. Now this is a little bit of an academic stuff over here that I want you to pay special attention to, because whenever you are writing answers in your examination, your academic stuff needs to be spot on. So why is it that we don't want a higher fiscal deficit? Because see, fiscal deficit essentially means that you are borrowing. That is what fiscal deficit is. It indicates the borrowing requirements of the government, correct? So if you have a higher fiscal deficit, means that you have a higher borrowing requirement. If you have a higher borrowing requirement, that means that you have a higher debt burden, right? So we don't want a higher debt burden. Why? Because if you have a higher debt burden, then your interest outgo or your debt service burden increases. If your interest is high or your debt service burden is high, that means that in future, a lot of your revenue is going to be diverted towards servicing your debt, is going to get diverted towards paying this interest. So in future, money that can be wisely invested in, let us say, infrastructure, or money that can be wisely invested in providing, let us say, meaningful subsidies and support to your population, that money will get transferred into the interest account. So we don't want that. So we want debt, but we don't want unnecessarily high debt burden, which will create a problem in debt servicing, which will then put a strain on the economy, right? Which will then impact private investment, which will then create a downward pressure on our currency. Any country that has massive debt, any country that has a massive interest burden, typically sees a general decline in its macroeconomic indicators, in the sense that growth is not so good, investment is not so good, confidence in your country is not so good, people are unwilling to put their money into your country, people are willing to pull their money out of your country, right? So we don't want to go down this path where these macro developments start affecting our economy. That is why we are having a hawk's eye focus upon fiscal development, upon fiscal deficit targets. So that's the important part over here. So the idea is that if you look at our track record, so our target for FY 23-24 was 5.8%, but we ended up achieving 5.63%. Now we have received 2.1 trillion rupees worth of transfer from Reserve Bank of India. So that is a surplus that RBI has transferred to Government of India. It is double of what we were expecting. So this money that has come in is going to be surely very helpful for the Government of India, right? That is why we are saying that we can actually improve our targets. We can actually better our targets. Okay. And even in the current financial year, we have done better than our targets because we had higher than anticipated revenue and lower than estimated spending. That is the path ahead as well. That have higher than estimated revenue, lower than estimated expenditure, or control your expenditure and you will be fine. Some very important numbers that you should always be aware of. Ballpark figures. You don't need to have exact numbers in your mind. But in FY24, government received approximately 28 lakh crore worth of revenue. Okay. And our total expenditure was approximately 44.5 lakh crore. And the difference between these two indicates generally the borrowing requirement of the government. Okay. So these are the broad numbers that you need to keep in mind. So out of this 44.5 lakh crore that we spent, approximately 10.5 lakh crore went towards interest payment and approximately 4 lakh crore went towards major subsidies. So these are the rough ballparks that you should always have in mind. So whenever the new budget is going to come for 24-25, the full budget, the complete budget for 24-25. So whenever I'll be discussing these ballpark numbers and you should be familiar with these ballpark numbers. Anyways, so we want to reduce our interest payment burden. That is why we want to keep fiscal deficit under control. RBI has indicated that this surplus transfer that they have given to government, going ahead also a similar kind of surplus transfer can be expected. So RBI is giving this kind of an indication, or this indication is there, right? That this kind of surplus transfer of 2 lakh crores, 2.1 lakh crore, something similar, maybe a little less, maybe a little more, can again be given to Government of India because of RBI's operations, right? So looking at these positive surprises, looking at the fact that disinvestment, asset monetization, etc., can also generate a significant amount of revenue. Because of all these positive developments, you can anticipate that our fiscal consolidation journey should be better. So on the tax side, there is a surprise buoyancy in GST. GST collection is good. So that is going to be very helpful, right? So all in all, we will be able to reduce our public debt. All in all, if we want, we can put good money into infrastructure, etc., and still be on the path of fiscal consolidation. That is the basic takeaway from this article. Now, based upon these numbers, based upon this idea, there is an editorial also, which is basically analyzing it. So this is going to be slightly repetitive. So I'll quickly move past this editorial. See, there are always two competing forces simultaneously at play. So on the one side, government has this tendency, any government anywhere in the world has this tendency that they want to spend more and more, create more and more projects, start more and more projects, right? Start more and more schemes. Why? Because the moment you start projects, spend money, create schemes, that means that directly or indirectly you are putting money into the pocket of your electorate, right? Let's say that the Government of India says that we want to increase the PM Kisan money 5 times. That instead of giving, let us say 6,000 rupees per annum, let us give 30,000 rupees per annum. Fantastic. Every farmer should therefore be happy. Every farmer should therefore vote for the political party forming government at the Government of India level. Correct. So the best thing to do is that start such schemes, keep spending money. This is populism. What is populism? That you are trying to please the voters, please the electorate, right? You're trying to create a soft corner in the electorate for yourself. This is one way of governance. Another way of governance is to not go down these roads, because these roads are treacherous roads. maybe one government can keep spending, but within a matter of 2 to 5 years, 5 to 10 years, your economy will be in an extremely bad shape because of extremely high levels of expenditure, low levels of revenue, and high levels of borrowing. Within no time, this state will arrive, and then governments down the line will have to start taking corrective measures. They will have to start curtailing expenditure very, very stringently, very, very strongly and strictly, right? So we don't want to go down this path of populism, which will eventually cause us a lot of pain 5 to 10 years down the line. Are you getting my point? So there are two competing forces. That should we try to have populist measures, try to please the electorate, or should we be strict in fiscal consolidation? Should we be strict with our budget? These are two competing forces. And this editorial is trying to explain to you that striking a balance between these two forces is good, and tending towards fiscal consolidation or tending towards being strict so far as your fiscal math is concerned, that would be more prudent than, let us say, inclining towards populism. That is what this particular article is going to say. Okay, so we have to resist populism, we have to choose fiscal prudence. Okay, fiscal deficit is targeted at around 5.1% of GDP. We can actually achieve better than this. We can focus on our revenues and expenses and achieve better than this. We have already spoken about RBI's bonanza to the government of India. So that's all great. Now, looking at the political scenario currently in the country, there is going to be some pressure upon the BJP or the Narendra Modi government, where they will have to basically make sure that alliance partners may try to pressurize. Because see, why I'm saying this, I'm not saying that I'm a supporter or not a supporter of any particular political party. I'm not saying that at all. What I'm trying to say is that between 2014 and 2024, BJP by itself used to have majority in the parliament. So they could decide the path that they wanted to take without being worried about their numbers, without being worried about having majority in Lok Sabha. Now that is not the scenario anymore. Now you need to take other political parties along with you. So what if certain alliance partners of yours say that we are not interested in this fiscal deficit mathematics of yours, we want you to start these schemes so that we can have a positive response from the electorate in certain regions. What if that kind of pressure starts to emerge? So that is what we are trying to say over here, right? That giving freebies, starting welfare packages so that you can woo voters, so that you can spend your way out of trouble, that is not the way ahead, right? That is not the way ahead. Giving sweet financial deals to specific states, that is not the way ahead. We need to be on the path of fiscal prudence. We have to make sure that we don't lose sight on fiscal consolidation. The good thing is that BJP has been able to retain all the major ministerial portfolios. That's a good thing. It's a good starting point. But at the same time, it should also be able to dictate the policy in the right direction of fiscal consolidation. That is what the idea over here is. Now, Nirmala Sitharaman is saying that targeting 4.5% fiscal deficit by 25-26 is too slow. We can actually be aggressive. Where we are today, we can actually be aggressive. Now, please understand this very, very clearly. In good times, right? Currently, the Indian economy is in good times, right? Our economic growth is good. Our inflation is under control. Our GST is having a buoyancy. Our RBI is transferring a huge bonanza of surplus to the government of India. These are good times, very good times, I would say, right? So in such good times, what any government should do is that they should create buffer. They should fill up their coffers. They should build up strength. For what? So that let us say 2 years, 3 years, 5 years down the line, if you meet a crisis, any kind of a financial crisis, or now a health crisis or a virus kind of a crisis, then if you are in a crisis like situation, you will have buffers, you will have coffers, you will have strength, you will have credibility to spend your way out of trouble. So when times are good, create strength so that that strength can be used when times are bad. Same idea has to be applied in this economics framework or this way of thinking that we are doing. That right now is the time where we can build up our buffers, coffers, and strength, right? So our economic growth is okay, our retail inflation is okay, right? Fiscal control is something which is now very, very paramount at this particular stage, right? Because if, let us say, fiscal controls are wisely applied, then we can also check inflation. We can also bring inflation down. We can also satisfy the credit rating agencies. We can also satisfy the investors that we are in the right direction. That is what we need to do. That's the basic idea. Okay, so tight fisc, it will keep borrowings down, it will keep interest rates under check, because see, if the government of India is borrowing more and more, right? So then what will banks do? Banks will tell the private sector that, okay, if you want to borrow from us, then give us a higher interest rate. Because see, we have a government of India standing right in front of us to borrow our money. So if you still want our money, then you need to give us a higher rate of interest. Now that's a problem for private investors, right? Because if they have to give a higher interest to banks, then their projects may not be profitable. Then their projects may have a negative ROI or a very limited ROI, return on investment, which may not make sense. So what you have to understand over here is that high government borrowing creates a problem even for private investment today. So not only does it create a problem for the future generation, but it creates a problem for the present generation too, which is trying to invest. So if you really want to release the animal spirits of the economy, right, then you have to make sure that your debt burden, your fiscal consolidation is in the right direction. That is what you need to do. We are having a 7% plus growth rate for 3 years continuously. That's a very good thing. Okay, so we don't need to press upon the accelerator unnecessarily. We don't need to spend unnecessarily, right? So that's what the basic idea over here is, that center must cut back its expenditure and it should make sure that our fiscal consolidation journey is on the right track. Now moving to an extremely long article, but a very beautiful article. Is going to talk about white gold or lithium, which was discovered in Kashmir. Okay, so far if you have any doubt, please ask. Otherwise I would like to move ahead, right? So Vishal Kumar has a doubt. Sir, what is primary deficit? And Divya has a doubt. Sir, can you please tell what is fiscal prudence? Sure. First let me answer Divya's question. Fiscal prudence. Prudence in English means wisdom, right? Prudent or wise, right? So who is wise, right? Somebody who doesn't think about future or somebody who thinks about future? Who is wise? Somebody who spends way more than their income, way more than their, let's say, revenue, or somebody who makes sure that their expenditure is keeping in line with their income or their revenue. Who is wise? So I'm sure that you will say that somebody who thinks about future, somebody who dwells upon future is wise. I'm sure you will say that somebody who makes sure that their expenditure is kind of in sync with their income or their revenue is wise, rather than somebody who is spending way more than their revenue or income, right? So this is common sense, right? So applying this wisdom or applying this prudential thought process upon the fiscal policy framework is what fiscal prudence means. It's just English. It's not so much economics as much as it is English, right, Divya? So if you have understood the meaning of fiscal prudence, please just type yes in the comment section, that yes, you are aligned. And Vishal, to answer your question, what is primary deficit, right? Now see, the idea is fairly simple, Vishal, regarding primary deficit. What is fiscal deficit? It is, let us say, the total borrowing requirement of the government of India, let us say, right? It's a total borrowing requirement. Okay, now from that gross fiscal deficit or the total borrowing requirement of the government, let's reduce the interest payment burden completely. Let's reduce the interest outgo. So what I'm essentially saying, let me just go back to my screen. So see, there is expenditure that we are making, there is a revenue that we are having, right? And this is giving us a sense of what the borrowing is going to be like, right? So this is what your fiscal deficit tells you, right? Now what we want to do is that if you want to have a sense of the primary deficit, okay, so you need to go one step ahead, right? From this particular number, you reduce your interest outgo or interest payment ka burden, and then whatever you get is basically your primary deficit. What does this do? This gives you a sense of what is the current mismatch between our expenditure and our revenue. Current mismatch, because see, interest is because of past actions. Interest is not my doing in the present. Interest is somebody else's doing in the past, or maybe my doing in the past. So let's remove past out of the equation. Let's remove interest payment out of the equation. Let's deduct interest payment from, let us say, the borrowing requirement, and then let us see how much needs to be borrowed and that whatever we are borrowing, right, that whatever we are borrowing now, that indicates my present mismatch between, let us say, expenditure and revenue, present current mismatch between expenditure and revenue. So I hope that, Vishal, this makes complete sense to you, that what primary deficit means. And if you have understood what primary deficit means, then I request you to type yes or type something in the comment section. And like this, I want you all to ask doubts. If anybody has got absolutely any doubt, please ask. Even if I don't know, I'll be honest, I don't know. I'll take time and I will reply to your doubt in the comment section after the end of the lecture. There will be situations where I will say that, okay, I know what I have to say, but give me 2-3 hours. I will leave a comment in the comment section, which will be an answer to the question that you have asked. So throw difficult questions at me, throw impossible questions at me. I'll come back to you with answers through the comment section, because the dialogue is always happening, right? And you can always come back in the next class, tomorrow's class, and we can always have a discussion. So although I can't see you, but I can feel you. I know that for sure. You know that for sure, right? Chalo, let's go ahead. Let's talk about lithium. So India is over here right now. That's a good place to be in. We have significant lithium reserves, right? That's a good place to be in. Lithium is very important when we talk about batteries, when we talk about EVs, when we talk about solar power generation or renewable energy generation, storage, right? So lithium is very important from a climate change perspective, from new technology point of view, or from frontier technology point of view. Lithium is very, very important, and India seems to be having decent reserves of lithium. Not as much as, let us say, a Bolivia or an Argentina, but not bad, right? You need to look at this particular graph as well. Lithium ion imports in India. Now this figure is in millions of dollars, right? So you can see that we started from $94 million, let's say around $100 million, to right now around $3,000 million. So there is a 30x jump. There is a 30x jump over a period of last 10 years in our lithium ion imports. This is how you need to talk in the examination. If you really want to leave an impact upon the examiner, this is how you need to talk. 30x jump over the last 10 years from $100 million to $3,000 million, roughly, right? And going ahead, if the annual lithium demand in India keeps increasing business as usual, so we will be importing, let us say, in tons, we will be importing close to 60,000 tons, right? And if we have if we look at optimistic scenarios, then we may go up to 90,000 tons by 2050, right? This is what number you need to project. When you start projecting these numbers, you have the attention of the examiner, you have the interest of the examiner, you have the respect of the examiner, and then whatever you say makes sense. So let's start talking about lithium in India. So 9th February 2023, GSI informed the entire country that significant lithium reserves exist in our country, right? 5.9 million tons of reserves of lithium exist in our country in Salal Haimana area of Rezi district in Jammu and Kashmir. That is what GSI informed us somewhere in 2023, right? So they did this exploration during the pandemic, and they made India, or they declared that India is amongst the top 10 holders of lithium reserves in the world. Impact was immediate. Everybody was very enthusiastic. There was a lot of celebration on media. There was a lot of celebration in a variety of newspaper articles. Half a dozen private sector companies expressed interest immediately that yes, we are interested in mining lithium reserves. Sajjan Jindal of JSW Group kept talking about it, right? State governments or your state-owned enterprises such as Coal India kept talking about the fact that they want to diversify away from coal, so they want to be involved in lithium mining and so on. So everybody is like really, really fantastic, enthusiastic, and so on and so forth, right? Government also moved very quickly. Government said that okay, let us put lithium blocks or lithium reserves up for auction and give it to anybody who is giving a decent price and wants to mine the resource. So in August 2023, very quickly rules were amended. Private miners, they were allowed to bid for lithium reserves. By November, stage was cleared, auction was planned, reserves were put up for auction, and what happened? Auction failed. What happened? There was hardly any bidder. There was hardly any interest in the auction. In second half of January 2024, we got a reality check. So all the brouhaha, all the enthusiasm, all the frenzy, and in the auction is failing. Bidders are not coming onto the table. Why? Right? So what happened is that for reserves in Kashmir, only 2 bids came, and that forced the government to cancel the auction, because as per rules, you require any bidding where less than 3 bidders are there, that bidding is invalid. So lithium, which is so important in, let us say, fight against climate change, it is the bedrock of batteries. It is going to power energy, consumer electronics, and transport going ahead. Why is it that nobody is coming ahead, right? This lithium is called white gold because it is that important. We are an import dependent economy. Why is nobody coming ahead, right? Why? So what's the reason? So I'll tell you. The first reason is that India's lithium reserves are unproven. This is something that you need to understand very, very clearly, very, very carefully. I want you to note down this particular aspect very critically, very carefully. See, you have to understand that there are 4 stages of exploration: G4, G3, G2, G1. Now these 4 stages of exploration are as per United Nations International Framework Classification for Reserves and Resources. Okay. Now what is happening is that our lithium reserves in Kashmir are classified under G3 stage. It is the second stage. So G4 stage is first stage, G3 stage is second, G2 is third, G1 is fourth, right? So any mineral which reaches the G1 stage, meaning that we have complete idea about that mineral, about its existence, about the quality, about the quantity, about the challenges that will come in mining that reserve, the cost of mining, the profit, the revenue, expected revenue from mining, therefore the profitability from mining, everything is known at a G1 level, right? The picture is clear at G1 level. But when you are at a G3 level, the picture is not clear. You don't know how much of it exists. You don't know what exists. You don't know what the costing will be like. You don't know what the challenges are going to be like. You don't know what the profitability is going to be like. Our India's lithium resources are at G3 stage. It's too early to celebrate. It's too early to expect anybody to put up money to, let us say, mine lithium reserves on a commercial basis. Anyways, so let's read. So we are at a G3 stage, or the preliminary exploration stage, right after reconnaissance, right? So G3 findings, these are just inferences, right? Quantity, grade, mineral content, we have estimated it, but we don't have much confidence in our own estimations. These are early estimations. Okay, you need to do much more intense exploration to go to a G2 stage. You need to do even more exploration to go to a G1 stage. So from 1999, we know that from a G4 stage point of view, we know that lithium exists in Kashmir. We know that since 1999. Okay, and we have just arrived at the G3 stage. Okay, we need to go ahead, right? So it has taken 25 years for us to come from G4 to G3, and we need to now go to G2 and therefore to G1. Now this entire process, international experience shows what? This entire process of going from, let us say, G4 to G1 can take 16 to 17 years. Our problem, India's problem, is that we have taken 25 years to arrive at G3. I don't know how much more time will we take to go to G2 or G1. Okay, so that is what the whole idea is, right? We need to determine and solidly establish that yes, this resource is economically recoverable, in the sense that anybody who spends money in digging this resource out will be able to sell at a profitable margin, right? Because if you are going to spend way too much in digging it out, then what's the point of digging it out? You're not going to make a profit, you're actually going to make a loss. So no private sector will do it, the government should do it on its own, because government can rake up whatever losses that it wants to rake up for the sake of national security, for the sake of our strategy, right? So bidding is intense when? Bidding is intense for G1 minerals. That is the basic idea that you need to keep in mind. You need to factor in risk and certainty. Right now there is a lot of risk and there is a lot of uncertainty, right? Right now it's difficult to put a fair value on the resource based on GSI's assumptions, because it's still at G3 stage. Another reason is that there is lack of know-how, right? We do not have a lot of technical know-how regarding mining of lithium. We have not done it. We have never done it. We don't have. So we need to probably establish some kind of partnerships, some kind of associations, maybe, right? So lithium is being mined globally, okay? And it is found either in the form of brine accumulation of saline groundwater enriched in lithium, right? Or in the form of hard rock in Australia. This is very important from an academic standpoint, that lithium is found either as a brine accumulation of saline groundwater. So there is saline groundwater that is enriched in lithium. That is typically what is happening in South America. If you see basically, YouTube series, etc. on lithium in South America and Bolivia, etc. So they will explain to you how this saline groundwater enriched in lithium can, say, how do you extract lithium. or it is found in hard rock in Australia, right? Now lithium in Kashmir, it is neither brine nor hard rock, but it is clay deposit. It is mixed with other minerals including bauxite. How do you exactly go about extracting lithium? That's a challenge, right? So commercial scale extraction production, it is yet to be tested globally. There is no precedent, right? So when the technology is so immature, when there are hardly any global case studies to go by, how do you go about exactly bidding for this? What do you know? What are you walking into? You have no idea, right? Now our domestic mining industry, it is mostly comprised of local companies such as, let us say, a GSW as well as PSUs, right? Multinational firms such as Rio Tinto and BHP, they have tried to enter the Indian mining market, but they haven't had much success, right? So as a result of which, our technical expertise regarding exploration and prospecting is not so fantastic, right? Our global mining, we neither have global mining companies from our side, nor has anybody really entered into India, right? So we auction our mines here, unlike the first come first serve system followed in Australia and Canada. You know the problem with first come first serve system. We tried to do this in telecom, and you know the kind of scam allegations, the kind of CAG calculations, the kind of discussions that happen in the Supreme Court, right? So any government will think 10,000 times before first come first serve in India, but they follow first come first serve in Australia and Canada, whereas we want to auction our mines. We believe that, okay, let us make money out of these resources today, okay? So global firms, given the kind of uncertainties and risks involved, they don't want to be involved in any kind of an auction. If we tell that, okay, we are open, we want the best mining companies in the world with the highest amount of experience to come in and mine this resource for us, and then we will see how revenue sharing, etc. can be done, there will be some interest. But the moment you start doing that, your past will start haunting your future, because the same kind of approaches that were followed in the past were rigged with corruption, were rigged with malpractices, were rigged with lack of transparency. Do you want to have that specter of problems or these kinds of issues in the future? Probably not. Another problem is sensitive location. We are just 50 kilometers away from line of control. It's a very, very volatile situation, right? It's a very difficult geography, right? Apart from that, Himalayas is a geologically a fragile region, so to speak. Land subsidence can be a problem, earthquakes can be a problem, right? So lithium mining, that in itself can take a heavy toll on the environment. It requires 2.2 million liters of water just for 1 ton of the metal. Where is this amount of water going to come from, especially in that fragile geography, right? Apart from that, there is always a green lobby that is going to resist any kind of mining activity in that kind of an ecology, Himalayan ecology, right? So these are all your challenges. Now, there is no denying the fact that lithium is the future. You understand that. You understand the importance of lithium, that it can pack a lot of energy. It is a key component of batteries, modern appliances, smartphones, laptops, smartwatches, wearables, tablets, and so on. So all these things have been written over here, right? Lithium ka import ka details have been written over here, right? Importance for EV, etc., renewable energy, etc., has been written over here. Okay, so all these things are important numbers, very important numbers that you have to start gathering, because this is that important, a part of your answers, a part of your essays. So please go through this. It's a very critical mineral. All the relevant information has been provided to you. Where does the lithium come from today? It comes from Bolivia, Chile, Argentina. They are giving about half, and then the rest is coming from Australia, Chile, and China, right? It isn't enough. Whatever the global production is isn't enough, right? It needs to be refined. China has a stranglehold. 2/3 of the world's refining capacity for lithium is in China. So whoever wants to produce can produce, but who is refining it? It is China that is refining it. Around 75% of imported lithium ion in India is coming from China, right? So we need to not only create production capacities, but we also need to have refining capacities, right? For which we need access to capital and technology. These refining capacities are not easy to set up. Okay, so that is what we need to do. So honestly speaking, we are probably years, maybe a couple of decades, at least 1 decade away from where the production of lithium will actually start in India, right? Now this failure of auction, right? So it is neither the government nor the industry which has given up on RACI. Nobody has given up. So reserves, they will be listed again in the 3rd tranche of auctions, right? And senior leaders of the industry, they again made positive noises, okay, because they understand that the government is into it, right? And if the government is into it, then government can always throw in viability gap funding. Government can always make it easier on you one way or the other way, directly or indirectly, openly or secretly, right? So the idea is very, very clear that whether it is Hindalco or it is JSW or it is, let us say, Sajjan Jindal or it is Coal India, everybody is interested. Government of India is interested. Let's see how things evolve going ahead. So, but yeah, that's the complete, download on what's happening so far as lithium or white gold in Kashmir is concerned. So I hope that you've learned a lot of new things. I hope that you're excited to get your hands on this document and make notes out of this document. I'll meet you again tomorrow. If there is any doubt, please feel free to ask and I'll be more than happy to address your doubts. So thank you so much, guys. Bye bye. Take care. All the best. Jai Hind to all of you.